Okay, in this episode, we're going to discuss the options portfolio, why it's been more of a disappointment in terms of my returns than expected, as well as touch on the pursuit of happiness, the real pursuit of happiness. This is Investing in Real Life Show, episode 6. Let's get it. What's going on, everybody? This sophisticated investing life here on President's Day. A little bit of a rainy, soaked day in Austin, Texas. All good though. Still going to tape the show. Checking out the selfie stick, which I like a lot more than I expected. So anyway, let's just get started with the show. But even before we get started, I want to give a quick update, quick announcement. And the announcement will be after this 6th episode. I'm actually going to take a quick pause on the show, and there's three main reasons. Number one is I've realized this affected the way I trade options. So I'm going to talk about that more in my commentary. How I've been trading options. Things have been a little bit different. How I've been, I guess, trading. It's like I want to talk about something weekly. So I've been doing things I wasn't doing last year, right? Or I wasn't doing usually. So we're going to take a pause from that reason, number one. All right, number two, realize there are two different types of people I wanted to bring in with the show. All right, it was people who are trying to get people interested in options trading, why I like it so much, as well as get people interested in investing in general. Those are two different types of people, right? They're not the same person. The person you would try to attract to get interested in options trading or in options in general is totally different. It's like next level than somebody I'm just trying to get interested in investing in anything, right? Whether it be stocks, whether it be real estate, whether it be small business, anything, right? So it's a little bit different, and I'm realizing that the two can't coincide. So what I'll probably do instead is have like a separate show just for my options trading. So I'll probably just do that. And then when I pick things back up, just focus on the people who are trying to get started investing. And number three, and this is probably the biggest one, is I've been hinting at myself creating a options course to kind of get people along the way. If you want to start from zero or start with minimal knowledge and take your way up to actually doing really good trading options, then I have the course for you. It's going to be coming out, I think, at the end of the month. End of the month seems like it's reasonable timing. The thing is, it's a lot more to create a course than I expected, right? I mean, I knew it was a lot, and I created the course itself, right? But it's also like, okay, I want to get people to watch a webinar, and I got to do a webinar presentation. And oh, okay, which webinar format are you going to use? Which platform are you going to use? Okay, I got to create a sales funnel. I got to create all these other stuff. I got to make sure I get an email sequence down. And, there's a lot of things that go into creating a course. I see why some people, they get started on it and they never finish, right? It'll be years before they actually finish, because it's a lot to think about. But with that said, I want to go hardcore for the next 2 weeks, focusing in on that, include on this President's Day that I am off work. Thank the Lord. But yeah, so those are the main three reasons I'm going to slow down on the show, the weekly show. I'm probably going to pick it back up sometime in March. It could possibly be towards the end of March. March is a little bit of a busy month for me, busier than expected. So I don't want to set too many expectations, but sometime around March, I'm going to pick back up the show. Now, let's get into my options commentary.
All right, everyone. So we've already discussed my announcement about slowing down the show a little bit, which is perfectly fine. You now know the reasons. So let's just jump straight into the options portfolio update here. And actually not that bad of a week, right? Up 0.6%, which isn't that bad. If you look, and actually at first it felt like a really great month because I closed out of 3 different trades here. First, the Alibaba thing ended up not killing me. As soon as it turned profitable, I was like, I'm closing that trade. I'm getting out of it. I don't care how good I think it still is. Nope, I am out. Peace. Let's get out. So we got out of that as soon as possible, right? And we'd even collect a lot of premium for all the risks that came with, right? I mean, that was a position that was open for 26 days, almost a month, longer than I would like it to be open. So we got out of that. We also closed out 2 other trades. One was Facebook, and the other one was the S&P 500, so the SPY. Right, so we closed out those trades, and those were some quick turnaround trades, 6 and 7 days. So, not bad. And now we have these 3 positions on still. Amgen's a weird one, and I'll talk more about it later in lessons that I'm still learning, or I'm still trying to remind myself to do. But Amgen looks like it's in trouble when in reality it's not. I mean, if you look at, let me switch this over. All right, let's switch this over here. So let me scroll down. If you look at open positions here, it looks pretty bad, right? Unrealized P&L are those numbers, right? But when you actually look at bid-ask spreads, like the real numbers you need to pay attention to when trading, the numbers are perfectly fine. They're perfectly fine with this one. It's what happens when you're dealing with illiquid options, right? Illiquid option contracts. So that's one thing. We also have a Goldman Sachs position on, as you can see, which is pretty much net break even right now, right at 0. And selling naked Nike, right? So selling naked Nike right now, and the number is in the money. But I'm going to talk about why I am in my lessons, why I'm holding on to this position just a little bit longer. Let's see. Let's go over so far in realized P&L, up 2.6% year to date, which, not bad. Not bad at all. And remember, I know there's this temptation to compare yourself to the S&P 500, which, of course, is easy for me to say because I'm now trailing it given the bounce back that happened in the market in February relative to January. But the idea is not to beat the S&P 500 any given year. The strategy is going to beat the S&P 500 over the long run. The goal is to be able to sustain getting 1.5%, 2%, 3%, 4% a month. That's the real goal. So if you're really pulling that off, then you are in good shape. Now, I've already touched on this before, but there's 2 new lessons that I'm going to bring up that, to be honest, one I knew about and wasn't paying enough attention. The second one I didn't even inherently know I was doing, right? So first one is liquidity. So I've already brought up, let me pull them up here. I already brought up with Amgen that it's an illiquid name. It's illiquid, right? And you need to pay close attention to liquidity. The setup was so great with Amgen when I first got into it, right? And I was like, oh, this is what I want. This is exactly the type of setup I want. The stock's kind of low. It's starting to bounce back, collect plenty of premium, especially during a time where there's not a lot of other ideas. Let's make this happen. If I scroll down, let me quickly check. Give me a second here. Quickly check. So the 205. All right, the 205 and the 90. So yeah, at 205, yeah, there's plenty of, that's not like a lot, but it's still plenty of open interest to, it's like, okay, I can get in and out of this relatively quickly. But down here where I set the backstop for my credit spread, it's only 42 like open contracts, right? And at least as of the last trading day, which was this past Friday, 0 people, 0 volume traded on that day. That is scary because like the pricing is going to be off. And on top of that, you don't really know if you can get out the position when you want to get out of it. That's the scary part, right? That's the biggest fear. You can't get out when you think you can, right? So that's definitely something I need to pay more attention to, particularly with the wide credit spreads that I set up and use. You got to make sure I'm out of illiquid positions. And probably when it comes down to it, liquidity should be more important to me than like the setup or the conviction in the trade itself. That's probably the new wave I'm going to go on. Liquidity matters more than actually like the trade setup. So that's one. Second thing is profit targets. And this is something I didn't expect, but I was just quickly looking over my results last year and start off to this year. And it's like, why is there a difference? It feels like I am underperforming my own expectations. And then I think part of it was, okay, that start off with a bigger account Yes, but I also know part of it too was in terms of how much I kept per trade. It's lower than right now than it was back then in 2019. So let's just look at the gross P&L, right? And this is for January, and we can also look at it for February, right? So yes, let's see. So for this was the Broadcom position I really didn't like, and right under is the Alibaba position. And Alibaba position, I collected more money than I expected. But down below here, so this is for February. I'm averaging keeping about $25-$26 per trade, right? Through closing 6 trades, I'll even look at gross. Gross should be closer to 140 or 150, right? I should be keeping more per trade. I think I got a little trigger happy closing out trades, and also having a show I want something to talk about every week. So I think that played a little bit more of a role into things than I expected. But these numbers, like keeping, I'll look at gross P&L, keeping only $16 or even keeping $23 over, and these are more liquid names that have potential, right? So like this top one's Boeing. So the Boeing position, yes, that should be better. And I know I had a second Boeing position on that kind of drug out a little bit in January. But even then, gross P&L is right at 30. So like 30 should be the benchmark. I should keep at least $30, if not much more, like closer to 40. Like that's the number I was hitting in the past, hitting 40. And I think I think being a little trigger happy. I see a setup and I'm like, I want to get in, and I'm like, my position is profitable now. I might as well get out and then hop in. But in reality, and I noticed this, reviewing certain things, and I'm even noticing it here. I mean, for January, closed out 8 trades, and for February, if all goes well, I'm gonna close out 9. Like on average, I'm closing out anywhere from 7 to 10 trades a month. And to maximize how well I do, I need to collect and keep as much premium as possible without getting overzealous, not being too greedy for those 7 to 10 trades. And I'm like, that's the range. So if that's the range, then I know I should do a better job of not just being happy having a profitable trade, barely profitable. No, I need to hold on a few more days longer and just take what I can get in terms of the actual profit target, at least $30, if not more. So 2 quick lessons to touch on. Now touching on market news that matters. Oh, well, actually, before we even get to market news that matters, I'm gonna bring up three names I'm looking at right now. I forgot to bring that up, so let's do that right quick. United Continental is one, which surprisingly for a smaller company, when I say smaller, 20 billion, like that small, I guess relative to in option space, it's smaller company. There's a lot of activity for United Continental, the airlines. So right now, I would consider selling naked. If I end up closing out Nike, maybe I'll do it, and I will do it here at the $70 level, and try to collect that $64 and have it decay about halfway there, and then keep the rest. That's one idea that we're looking at. We're paying close attention to. Second one is a name that I've had success with in the past, which is Apple. Setup is not as great as I would like it to be, but like I mentioned before, it's like I'm at the point now where I'd rather take an imperfect setup but have great liquidity versus take a perfect setup and liquidity is not really there, right? So with Apple, let me scroll down. Apple, looking about at the 290, 295 level. I haven't decided which one yet, but it will probably be a wide enough credit spread for me to keep. We'll start off collecting about $70 or so, right? So collect that much, hopefully have decay, and keep half of it as the profit. Last one would be Microsoft. Microsoft is interesting in that the actual price setup, again, is similar to Apple, in that the price setup is not as great as I would like it to be. But I also know that there's extra volatility in the name, and I'm not. I think it's something news related, but it's, or maybe not. But I know it showed in volume, right? So when people talk about implied volatility, and it all goes back to implied risk versus perceived risk versus actual risk, right? So some stocks like Tesla, if you look at their options, I mean, all the pricing looks juicy, but that's a very volatile stock. It makes sense. Other times it's some moment or something happened. Either the price moves around a lot, some news came out, or in the case of Microsoft, something volume wise has happened. So if Microsoft can go up in price, actually, which is interesting, if it goes up in price, this 170 right here looks really interesting. Collect a fair amount, and I'm not sure if I'm going to, it's probably too big to do naked. So I'll probably do a wide credit spread there and collect as much as I can here. And that's also another thing I realized. The wider the credit spreads, the better, because you collect more. So that is what we're looking at. Now, let's move over and talk about some news. Market news that matters. Now, even with things that are happening broadly in the economy, retail sales are down, coronavirus is still in the air. The market's still doing great. I mean, it's still doing fairly well. Still reaching new highs. It's almost a new thing every year. I mean, every day. And it almost makes you wonder, how is that? Shouldn't these concerns be more, show more in the markets? Well, I don't know what's going on my computer right now. Well, actually, that probably is not more of the case, right? And it goes back to what happened when the coronavirus first hit. Hit the fears of everybody, and you saw the market reacted, right? At first, I think it was on a Friday, stock went down. I said on here, like, hey, I expect stocks to go down further. Instead, the market went up by plus 1% 2 days in a row, because it's just a general feeling that as soon as things get a little rough or a little rocky, don't worry, one of these governments is going to bail us out, whether it be the Bank of China, the U.S. They're not going to touch rates. That's not going to happen. Will it be the euro? I mean, who knows? Somebody. But that's the general feeling. Like, it doesn't matter unless it's just earth shattering. If that's not happening, then everything's going to be fine. Everything's going to be all good. Don't worry. Somebody's going to be there to bail us out. The market can keep flowing as is. So that is, there's always a thought, like, when people are being too relaxed in terms of risk in the markets, you need to watch out. I'm not that we are there yet, but I am saying we are getting there, right? So scary things to come. So here is another, oh, come on, computer. You're killing me. Here's another thing to look at, and it's this idea around 5G. I don't know what's going on here. But anyway, it's this idea around 5G. Now, I've thought about doing a video on 5G, and I might as well just go ahead and do one. But, man, it's a tricky thing, right? Because there's multiple players. It's not as clear cut as people think it is. There's a lot of regulatory things to watch out for. A lot of regulatory things, a lot of government intervention when it comes to 5G and 5G stocks. So the author of this piece is touching on applied materials. And I might just end up doing a video on this. But this is one of the more interesting names that is in the 5G space. Also got a little bit of the artificial intelligence theme, right? I did a video a long time ago about AI stocks that, to be honest, I think may be my most successful video to date. Did it a while back. I'll even link it up in the card. Watch out, the audio is kind of bad, but hey, it's still a good video, right? I went through some stocks. I might do a brand new look at that video in particular and see how things are about 2 years later, right? But 5G is different than artificial intelligence, because artificial intelligence is broad reaching and it's more of a private sector thing. Whereas when it comes with 5G, the connections, networks, there's a lot of government intervention in there. So whenever I see something like, for example, in the Motley Fool, or there's somebody pitching this hot 5G stock, I'm like, watch out. If they're not talking about any of the regulatory issues that can come up, I mean, there are a couple of hedge fund managers I know towards the end of last year. I forgot the name of the stock. I'll get to looking for that name of that stock. But the stock cratered because something didn't go their way, like for a certain auction 5G wise. It's a lot of crazy things going on. There's also multiple countries. It's not just a US thing. It's a UK thing, right? It's a UK thing, all of Europe thing. You just got to watch out for all these things, right? And if you're not paying close enough attention to what's going on, regulatory wise, then stay away from 5G. It's the same thing with cannabis stocks. Same exact thing. You are inherently making a bet on something regulatory happening. So if you are not up to speed on that, just buy an ETF and hope for the best, right? Don't dig deeper into an individual stock. And I'm even fearful of buying an ETF. But it is what it is. If you're interested in that, then go for it. Now, and also, by the way, all these names here, I'll probably talk about in a video to discuss 5G further. Now we're going to do our YouTube shout out, and this one, there we go, is going to go to Best Stock Strategy. Now this is an interesting one because this is another YouTuber that focuses on options trading, actually options selling, right? He focuses on the exact same thing I'm focused on. And I've learned actually a lot from him. He kind of helped me evolve, like take my trading from what I was doing at the beginning of 2019 to what I was doing at the end of 2019. This is somebody who played a major influence in that. And I think part of it too is, we both have similar backgrounds, investment banking and the finance sector, yada, yada. So yeah, no, he's really good to watch. He has this video about how, don't overcomplicate the process. Keep things simple. I think he's low-key taking a jab at others who are also in the option selling space. Some other people tend to make this a very complicated subject when in reality it's not. It's not that complicated. If you just think about it in insurance terms, you're just selling insurance for stocks. That's all you're doing. And just like selling insurance for a home or for your car, for anything else, like it's a net profitable business, it's net positive. The same thing with stocks. This is his channel. Check him out. He's pretty good. Now, let's get on with our life lesson for today.
Okay, so I wanted to touch on this idea of the pursuit of happiness, right? The pursuit of happiness is, and partly connected to Black History Month. If you know the movie I'm referencing and the guy I'm referencing, you know what I'm talking about, right? Will Smith with the son and rehashing somebody else's life. I mean, it was very touching. I don't know. It's a weird thing. It's a combination of me watching Will Smith in another movie that made me think of the movie and the story, as well as me listening to Kid Cudi. He has a song called "Pursuit of Happiness." Kid Cudi's I'm his biggest fan, biggest artist influence over my life, and it just had me thinking, from a financial standpoint. Does money make you happy? Right? Does money make you happy? Of course not. Absolutely not. Money by itself doesn't. Right? It's just a tool. It can be used as a tool for happiness, right? But money also doesn't solve all problems. You got the Biggie line, more money, more problems, right? So, with that said, if money's not going to solve all the problems, then why should you sometimes push so hard for financial happiness, independence, right? Why should you push for financial freedom? Because the lack of financial independence, the lack of money, breeds misery. Okay? It breeds misery. It makes life so much tougher. It's so much tougher doing things in life when you always have to think about, do I have enough money to do this? Do I have enough money to do that? Right? Starting from survival mode, just you have enough money to pay the rent, pay all your bills, are you running cash flow negative there? There was a point in my life where I was running cash flow negative just at that, which is a totally different subject, right? So that's part of it, and then it moves next level where it's like, okay, my friends are going out, Do I have the money to go out with them? You know, they're taking a trip. Do I have the money? Do I have enough money saved up for a trip? You know, do I even have an emergency fund? Right? Do I have money saved up for whatever? And of course, you know, in terms of like control over your life, if your life is controlled by an employer and you're not making progress to relinquish that control, then, you know, you just, that thought of always thinking about money with every decision you make is a daunting one. Honestly, it's a daunting one. It's a scary one, and there's a lot of people who have that mindset and has not taken the steps to get out of that mindset. So that's the real reason to invest, and the real reason to really focus in on trying to achieve financial independence, because you don't want your life to be driven, every decision you make to be driven by, well, do I have enough money? Is there enough money around? Am I still making progress? Yeah, you don't want any of that. You don't want any of that. And oh my goodness, when kids are involved, I think that's the next level. That's where you got to take things to another level, right? Because, you know, kids are expensive, but you love them. And sometimes you'll make the right sacrifices, but it's not easy. It's not easy, and I don't wish that upon anybody. That's the real reason that you need to focus on financial independence. And actually put a plan together, right? And it might take some time. It might take, you know, if you're lucky, it could take 5 years. It might take 25 years, right? It might take a while to get there. Part of the reason I wanted to have my course is that it's like, all right, if you do this, it's a part-time thing. You know, you can spend an hour, maybe two a week on it. But on an hour or two a week, if you really start doing really well, you can achieve that financial independence in 5 to 10 years, right? Quick, you can make it happen. Like, you can see it on the horizon. So that's part of the reason why I wanted to come up with the course, kind of push people to like, hey, you can get there quicker than you expect, and you don't have to worry. You don't want to be making decisions based off of money. It's on if you got it or not. And you want your time back. Who doesn't want their time back? Reaching financial independence means you get your time back. That's more important than money. Get your time back, people. Get your time back. All right, that's my focus. That should be everybody's focus. All right, and that's all I have for you all this week. Again, gonna take a quick break, quick pause and everything. Probably gonna go back to bare bones basics in terms of getting people started in investing with the show. And I'm probably gonna have a bi-weekly check-in on my options trading. I'm starting at the end of February. Michael EJ here, Sophisticated Investing Life. Thank you for watching. Stay sophisticated.